Hey, good morning, everybody. So glad to be back. Thank you so much for joining me this morning. It is Monday, Martin Luther King Day. We do have a nice, slow, steady, easy volume holiday day today for us to completely update the markets, for me to give you guys an insight into what has been going on this past weekend, give you a little bit of a sneak peek of what I was doing while I was on my business trip, as well as some interesting fundamentals moving forward. By the way, yes, Mike was not muted. You get to hear my very in-depth pre-show warm out. You're just lucky that I wasn't doing my she sells seashells. Anyways, moving on. We've got some interesting stuff to talk about today. Some very exciting things happening in cryptocurrency over the weekend. Some more positive, some more negative, but we're going to break those down for you guys as well. Take a look at the markets. I'll give you guys an update on my positions, what I'm doing, what I'm looking to open up. I do not like to hold open since I'm not in directional positions at the moment. I typically do not like to hold those open over the weekend. So the positions that I held open over the weekend personally were the trades that Alex and I had made. They were an LTC long, a BCH long, and then recently, actually, over the weekend, a buy stop triggered on Ethereum USD Quanto. So current positions personally sitting in, although the trading group members did a whole lot better than me this weekend. I missed a lot of volatility being on the road. So shout out to those guys. Congratulations. I looked at the tracking sheet, looked at everything that Alex did while I was gone. He did such an amazing job with the premium trading group. So I just want to start the show off today by giving Alex, our analyst, a huge shout out. You did an amazing job of managing the trades. There were some tricky situations. A couple longs got flipped to shorts, and you were able to just kill it, my dude. So thank you. Thank you very much, man. And, you know, big thumbs up. Congratulations to the premium members who got in on those trades. So LTCH19 long, still in great profit on that. So no reason to adjust my position. 2 of my take profit targets already got hit. So all I did was actually TeamViewer into my computer and go ahead and just slide my stops up a little bit. BCHH19 drawdown right now actually came down to my stop loss, barely missed it and moved up. So now I'm just a little bit below break even. So I don't see any reason to sell at the bottom. If it comes down and hits my stop loss, that was the original plan for the trade. But you don't sell at a loss unless the conditions have changed, and nothing has changed for me on that trade whatsoever. See, this is an example of how Alex managed the situation so well. He flipped the long to a short at break even and managed to pull out 6% profit. So see what you can get with active management of a trade as opposed to me being on the road on my phone. Let's see here. And then an ETH/USD buy stop did trigger. So only that hasn't moved whatsoever, really at all. Just kind of sitting absolutely flat. And honestly, it's a small position, so I haven't updated it. It's a spot where I would be more prone to take a long position. And again, as I posted out to the premium members this morning, and we're going to get into that with my analysis, but we're in a spot where you don't want to short the bottom because we are sitting on we are sitting on support. So you don't enter into a short at that level. If you are looking for support to break and you're in consolidation at a support level, you do always wait for a bounce. And interestingly enough, as I'll get into, there is a gap on the CME chart that I am looking to fill. So the 3650 level is the level that I'd like to be targeting if I was going to go for a short trigger. Now, going down to the 4-hour chart, there is a potential scalp trade on the table, and also a potential to enter into a long, depending on how you, to enter into a short, depending on how you look at it. So depends on what time frame you're trading. Again, I don't have an open position on XBT, and really I didn't have a planned as of today. Like I woke up, looked at the markets, and I said, Ethereum looks great. Let's go long on it. No, a previous analysis, I have buy stops and sell stops scattered, at key levels that I want. One of those got triggered in a short term, so within 5% of the price of the median that I was measuring, one of those got triggered. So holding that position open, I'll look and see how it goes today, and we'll update that. So, all right, moving on. Let's start off with some interesting news. Let's switch over here to this. And I do want to talk about some things that I don't hear a lot of other people talking about. And I just want to give you guys an update. Well, one of them I do know other people are talking about, and other ones, the other two, not so much. So just a second. Don't let me down. Don't let me down, Streamlabs. Let's go. There we go. Okay, great. Obviously, January premium trading tracking signal is doing absolutely fantastic. This is the update for the premium trading group. Week 2, we did close out. Again, this is not margin positions. This is position size profit. This is not, disclaimer, not indicative of what your total portfolio growth will be looking like. You are not making 124% on your total account because we are practicing risk management. So what that means is that while everybody else who has no idea how to even pronounce risk management is losing 5, 10, 15% a week and cashing out and getting out of cryptocurrency, we are hedging our USD position. We are managing our USD position, increasing our Bitcoin size for our supply of investment, and also increasing our dollar valuation. Why? Because we plan 5, 10, 15, 20 years out for how we trade, and we trade appropriately. And we're pretty good at it. So anyways, week 2 doing fantastic. And of course, guys, if you do want to join the premium trading group, it is premium.crackingcryptocurrency.com. The information is also in the Discord. Links in the description down below. Let's see here. So a lot of individuals in the cryptocurrency market do not pay attention to traditional markets. I do. In fact, that was most of what I ended up listening to, not speaking about, at the investor conference that me and Scott spoke at on Saturday. So me and Scott, I left my place on Friday morning, got into Illinois, and spent the day with Scott just doing last minute preparations, working on some technology, and also meeting with a few investors. And then we went up to Milwaukee on Saturday and spoke at the Westmore Country Club to the Wisconsin chapter of the American Association of Individual Investors. There were some other presenters there, one focused specifically on underlying bond trading, and another one specifically focused on your traditional stocks, and how he uses he was a chartist, he was a technical analyst who runs his own firm. He talked about his indicators, his bullish sentiments or bearish sentiments. This individual was kind of bullish on the S&P 500, but I did like the way he qualified it. He said, listen, Here are the qualifications on my chart. Here are the technical indicators that I use on more often than not, so 80 to 90% of the time, when these qualifications are met, we go up. Everybody's terrified of the S&P 500 right now. More than likely, that means we're going to go up, looking at the VIX, looking at the, all this stuff, right? But I liked that. What I do like to see from traders and chartists, whether we agree or we disagree, is that you are disciplined, you are consistent, and you are following rules. If you come at me with a subjective idea of a trade, well, I kind of feel like it's going to go up. Now, I do that too, right? Like, I've been trading for a long time. So when I look at a chart, I do have intuition, right? I do have a gut feeling, but my gut feeling is based upon years of following strict rules. So I don't trade my gut feeling. I use my gut feeling to guide me and give me an impetus. But if the technicals do not match my gut feeling, the trade goes out the window. And this is the problem with what most people do. Most people are not humble enough in their own opinion or intelligence level or analysis, because extremely intelligent people, let me rephrase that. Extreme intelligence doth not a good trader make. All right. I know very, very, very smart people who just could not catch a good trade if their life depended on it, because they think they're smarter than the market. And the market doesn't care what your name is, doesn't care how old your kids are, doesn't care how much student loan debt you own. The market does what the market wants to do. So you have to realize that it doesn't matter what you think. If your analysis is not correct, or if the market does not validate your analysis, accept that. Thank you so much for the sub on YouTube, by the way. If the market does not validate your analysis, you do not take it personally. You realize that is part of the game. The stop loss, the loss that you make when a trade triggers a stop loss, is the fee that you pay to have the opportunity to take a speculative winning position. All right, let me repeat that. When you take a stop loss, so when you take an L, that is the fee you pay to be able to be a trader, okay? It's as simple as that. You're going to take losses. You are going to take losses. Not all your trades are going to work out, because you're not always going to be smarter than the market. And often, even when we win, we're not smarter than the market. We were just putting the odds on our side, because every trade is a coin flip. It could go up, it could go down. In fact, this is a three-sided coin, because the market could go sideways, sends you into a, oh my God, I entered this trade 2 weeks ago. It's done nothing but go up 0.5%, down 0.5%. This is like traditional stock trading, swing trading. I'm tired of this position. I'm out. You get out at break even, maybe even a slight profit, maybe even a little loss. And then the market like immediately moves up or moves down highly volatilely. So that's another way. Capitulation can be brought on. Capitulation as in not just a market turning, but capitulation as in somebody emotionally exiting a position. So anyways. Boredom is a hell of a tool. So Chinese growth hits a 3-decade low. So the Chinese economy recently published their economic growth. And although individuals are excited because the Forex market seems stable and, it was actually 1 point above what they had predicted. So predicted average growth of the Chinese economy was 6.5%. And they reported 6.6%. Unfortunately, that's well below their average over the last 30 years, and that's actually the lowest they've ever posted. So individuals, at least I am looking at this as a leading indicator that the world's fastest growing economy is slowing in momentum, and this underpins into cryptocurrency like this. It doesn't matter if the stock market rebounds from here. So I used to trade technical equities and options. I have looked at the stock market. I do chart the stock market. In fact, I do have some clients that specifically ask me to do my charting on the DJI, the SPY, the spiders, whatever they want me to do. Okay, I will give my best technical analysis. And you do have to look at the fundamentals. You have to look at the news. You have to look at what's going on. You have to look at bond rates. You have to look at expiry yields. You have to look at all this information. And you do, even as a cryptocurrency trader, especially if you're trying to trade as many markets as I am, or at least be semi-successful. Let me put it that way. You have to look at underlying fundamental data. Now, I prefer to look at sentiment data, because often the information that most individuals look at, such as earnings reports, et cetera, et cetera, et cetera, it's often already priced into the market. When you have a piece of knowledge that is common knowledge and you think that this piece of knowledge is the critical crux of your trading position, unfortunately, if everybody else has access to that knowledge, it's probably not that important. It's probably already been priced into the market. You do have to actually either use existing data that nobody really pays attention to or doesn't understand, such as psychological data, psychological understanding, sentiment data, longs to shorts ratios, what assets are correlated to other assets. For example, one thing that I don't hear a lot of people talk about is how Binance Bucks, BNB, is a leading indicator of the market. Why? Because Binance is one of the highest volume exchanges, especially for United States traders. And if the value of BNB is going up, that means that open interest is going up in cryptocurrency trading. It is a leading indicator when the price of BNB goes up, because when people are buying BNB, they're doing so to save fees for trading on Binance, and there's a financial incentive to buy and hold BNB when the market's going up. So if you see BNB going up, probably a good indication that the rest of the sector is going to go up, because cryptocurrencies rise and fall in sync. I mean, you know this. We look at the charts. Pretty much everything's green or everything's red. Just the way it goes. All right, they're all very tightly correlated. We have not seen significant decoupling except in some time-dilated periods. The most significant example of this would be Ripple and BTC, but only in certain times. It's kind of like a frequency. It goes in and out of sync. There are times when XRP is extremely correlated to BTC, and there are times when it is absolutely inversely correlated to BTC. So this is important, and the reason this is important is because we are in an economic situation globally where we had the 2008 financial crisis. This was the impetus for Satoshi Nakamoto's white paper. In the first place, this was the impetus for Bitcoin and blockchain technology, all right? It was because we were like, listen, you guys have been playing fast and loose with our money, pension plans, 401ks. You have just, straddled yourself upon the money chute tube of the entire economy and just stuck a straw in it, and we're sick and tired of it, and we're going to go off here and create this thing because now we have the internet and the technology necessary to do so. So we have now, 10 years after the financial crisis, public and private debt at all-time highs, pretty much globally. And here we have like the one big hope, the last hope of the last 2 decades, really. The Chinese economy. It's going to boost the global economy. We're going to be able to grow our way out of this debt, right? We're going to be able to keep earning enough money to be able to make more credit, to assume more debt so that we can pay on the interest on our currently existing debt, all right? We were going to grow ourselves out of debt. And you can do that in a booming economy, right? You can grow yourselves out of debt, or at least you can keep the Ponzi scheme going on another 10 years, which is what we did in 2008. But I don't see, so now the new hope is India. So we have to see, the Indian subcontinent is the fastest growing, projected to be the fastest growing economy in the world. Companies like Facebook, companies like Google have been trying very, very hard to get their product into the hands of Indian users, because they're coming online faster than any continent, and they have billions of people. Or I don't know, it's like 1.2 billion. Sorry if, again, I'm not. All right. You get the point, right? I can pull up the number if you want, but I'm making a broad generalization, all right? I think it's like 1.2 billion. All right, moving on. They're coming online faster than any other place, and they've got a lot of people. So they want to get their fingers in that market. These are also areas of the world where we should hope to see the adoption of cryptocurrency, because we do want to see developing economies not make the same mistakes, or get sucked into the same Ponzi schemes as we've let centralized economies, not centralized economies, but larger economies, first world economies, America, Europe, Germany, et cetera, et cetera. So I don't think we can grow ourselves out of debt anymore. Putting our faith, kicking the can down the line now, India is going to save us because their economy is going to boom, and we're just going to be able to suck off that for the next 20 years. I mean, that's basically kind of what happened with China. Now, it's not a net negative, okay? This is, the Chinese economy is much greater. The quality of life of a Chinese citizen is greater now. Now, we'll just not take it politically, right? Because it's a communist regime, et cetera, et cetera, et cetera. You guys know how I feel about that crap, okay? But can't grow ourselves out of debt anymore. I think that death knell has been rung, at least in the short term. Now, maybe we'll come out and the Ponzi scheme will just get the party started again. But Band-Aid slapped on the economy, on the global economy after the 2008 financial crisis. Now we have public and private debt at all-time highs. Can't grow ourselves out of debt. There has to be a reckoning. Doesn't really matter what the stock market does. Could happen this year, next year, 3 years, but it's coming. It's going to happen. And investors are already looking to hedge right now. That can pull back a little bit. If the stock market booms, they'll be like, oh, well, we were just going to go all in on gold and all in on crypto. That's where I'm getting with this point. But now the stock market went back up. Cool, we're gonna break new all-time. Whatever, it doesn't matter. You cannot stop the inevitable, right? And I'm not a doomsayer, okay? I'm really not. I think that overall the world is heading in the correct place. We have the technology, we have the ability. The world does improve itself over time. Over time, if you look at the history of humanity, it is a slow march toward progress. Empires rise, empires fall, wars are fought, people are killed. Yes, it sucks, especially on micro level, especially if you're the conscious entity staring out those eyeballs and you just happen to be on the short end of the stick. But you do have to look at the human organism as a larger social organism, which is what it is, and see that over time, if you look at the history of humanity, we adopt the correct technologies to move mankind forward. And I've got a big analogy on this, kind of a fundamental point, but I'm going to diverge from that right now. So investors are going to have to hedge. They're going to look toward traditional hedges such as precious metals. I think gold is a great buy. It's a great buy and hold. It's probably a controversial statement, but I really don't care. I've seen this before. We can get into the technicals if you want. I mean, I can give you the whole, listen, man, look at this indicator here and all this, and that's because that's what I do on a daily basis, right? But you have to start from a fundamental understanding, like, why are you in Bitcoin? Why are you watching this show right now? Why are you interested in where the Bitcoin market's going to go right now? To make a quick buck? Okay, why are you still here? Because Apple stock is more volatile. If you were just interested in trading money, now there's advantages, obviously, let's not get into that. And I'm not advertising that you stop watching this channel and go watch another channel that specializes in Apple trading. I think this is where you should be. I think you're in a great place. Thank you so much for the support, guys, everybody. But why are we involved in cryptocurrency? I assume that we all share a fundamental belief that this is revolutionary technology that will change the world. It's also been one of the best performing assets over the last decade. So there's that. So if investors are going to hedge, they're going to hedge in precious metals. That's your traditional hedge. But there's problems with precious metals. There's problems with using gold as a world currency. Bitcoin is better. It's a better form of money. So there's your fundamental reason to be bullish on the long term for cryptocurrency. One of them. There are many others. Social reasons, economic reasons, but that is a strong reason right there. So I'm sure everybody has heard of this. KYC information reported to be leaked on the dark web from major exchanges such as Bittrex, Poloniex, and Binance. Now, official releases from these major exchanges have said that this information is unconfirmed, that they don't think this is real. We don't know yet. According to CCN, who did this original reporting, they said that they have sources who found, and this is, I know this much to be true myself. There was a vendor on a dark web market that was offering bundles of KYC information. So you would buy a bundle and you would receive a file, a zip file or a list of pictures. And in that zip file would be a lot of JPEGs or whatever he was using, GIFs, doesn't matter. And that JPEG file would be the KYC image that was uploaded to these major exchanges when you were asked to complete your KYC AML compliance. So what this means practically is that if this is true, and we don't know that it's true yet, according to CCN, they went undercover and contacted the vendor and were able to get, they didn't pay him, but they were able to get 3, what's the word I'm looking for? Examples, like 3, free samples, you know what I mean? First one's always free, kid. And now, according to Binance, who they cross-referenced with, CCN, Binance said, hey, we took a look at the information that you sent us, and we pulled up our copies of those KYCs, and they don't match. So this individual, this isn't real. Like, this is not real stuff. Now, we don't know any of this to be true yet. I'm not going to venture onto the dark web myself to figure out this all for myself, and I really don't care. I care, but this just lets us know. So, how do I say this? We do need to relax, okay, and not freak out, because again, if you freak out, you're going to make the market move, especially if retail panics all at once like lemmings. But this is a fundamental reason to be a little bearish on the market right now, because if we've had so much goddamn positive news in 2018 and 2019, technological development, the Lightning Network, Basically, all the major altcoins that aren't, scams yet, because they haven't exit scammed. I'm talking about the big ones, Tron, Ethereum. They've had, good innovation, good development. They've built more dApps. They've grown their network stronger. The network has become slightly more decentralized. They've had more they've had more master nodes. A lot of work has been done in that field, master nodes. A lot more master nodes now that are working than there were previously. And there's there's more than that. It's adoption. It's people knowing what cryptocurrency is. Even if they're speaking about it with maybe some reluctance or even distaste in their voice, because I get that a lot. They're talking about it much more than they were before. They know about it. So I'm not sure where I want to go with this. Basically, we don't know. I'm not gonna spread FUD. I just don't know. I don't know if this is true. I don't know if it's not true. I don't know if the vendor actually has been able to hack all the major exchanges. They released Binance, Poloniex, and Bittrex, which is what was reported on, and does have KYC information. The implications, if this is true, does mean that if you did KYC AML compliance, you should be taking some precautions, most likely, because if your social security number or your driver's license number or all your personal identity, such as your date of birth, is out there, then individuals can use that to open up accounts in your name. They can use that to purchase things in your name and send you the bill. So there are precautions you can take. There are credit reporting agencies out there where you can file alerts with. You have, depending on what financial institutions you use, you can put fraud alerts out and identity theft alerts out. So I would recommend that you take the proper precautions and be safe, but we don't know yet. And this also has nothing to do with the security of coins on exchanges yet, except for the fundamental danger of holding your coins somewhere where you do not have access to the private key. Somebody else does. But as far as, is Binance safer or less safe to keep your Ethereum on there than it was yesterday? No change. And then one other thing before I get into this, because I don't hear anybody talking about this. There was an Ethereum chain split. And I said this leading up to the Constantinople, man. I said this for weeks and weeks and weeks and weeks and weeks, because you guys are great in the live chat. I love you guys. But I get people in here and I talk about Ethereum, and I don't really like Ethereum, right? Let me rephrase that. I think Ethereum is fantastic, all right, for what it purports to do. Global computing sounds fucking cool, man. But I don't really like the Ethereum community. I disagree with some of the decisions that they've decided to make over the past 2 years, really. I don't like a lot of Ethereum fanatics that I meet, like on a personal level. They seem to think, again, most of them think that, oh man, Bitcoin sucks and Ethereum's great. Like, no, like Ethereum can be cool, but if you think Bitcoin sucks, like I don't understand what you're trying to do. Like, so we're going to make computing, on the cloud, basically, not on the cloud, but on the blockchain. Great, that's awesome. I'm just trying to liberate mankind from economic slavery with a decentralized currency, like money, that's safe. But no. Making all the computers decentralized. No, that's way more important than liberating mankind from millennia of economic tyranny from centralized authority. Nah, cool, dude, I get it. That's my big problem with Ethereum fanatics. Now, Ethereum in and of itself is not bad or good. It's actually pretty cool, right? It's cool concepts, good development, brilliant programmers, fantastic, right? And it's been a good performing asset as well. But the cognitive dissonance between the purpose of Ethereum and what it can and is meant to do, and the purpose of Bitcoin and what it is meant to do, I find that people who are extremely fanatical about Ethereum don't get it, and they're kind of distasteful, in my opinion. Now that's not to say that all people who like Ethereum are like that. Again, I know some wonderful people who love Ethereum. My business partner loves Ethereum, and he is a well-balanced, very intelligent, highly successful man. And shout out to you, Scott. And we agree on the fundamentals that Ethereum's cool. I think one of the reasons that I get a rap as being negative on Ethereum is because I just point out, because I'm just honest about it. When it does something stupid, I say it's stupid. And when it does something good, I'm like, attaboy. And most people are just like, all the good or all the bad. Well, that's being dishonest. And hopefully I don't have a reputation as being dishonest. But there was a chain split. So when the Constantinople upgrade was delayed, as I'm sure you guys are aware, there was a bug found in it that would allow, because of the way that smart contracts communicate, when two smart contracts communicate, it would have been possible because Constantinople reduced gas fees requirements. There is an underlying issue in Ethereum with smart contract development, so that when smart contracts communicate, the one smart contract can push a function, force smart contract A to execute a function. So if smart contract A is communicating with smart contract B, smart contract B has the ability to push a function, force smart contract A to execute a function. And in this case, the function could be send more money than you had intended to. And this wasn't fixed, right? Ethereum did not. This is a problem in Ethereum. And the fix was, well, we'll just make. And again, I'm sure that I'm not probably because I'm not a developer. I know that I am fundamentally explaining it correctly, but there might be oh, well, it's not just that. There was a few. Okay, whatever, dude. The main point is the same, right? Smart contract B can steal from smart contract A, right? And the fix was, well, we'll make gas expensive, right? Kind of. It's not indirectly, but they made gas in such a way that it would have been impossible for them to do so because the gas would have been too expensive. So one of the big Constantinople upgrades was reducing the fee of gas so that so the smart contracts could communicate more efficiently and we could execute more contracts. Unfortunately, nobody thought, what about this problem where smart contract B can steal from smart contract A? And, I think it was Chain Labs found the vulnerability flaw and actually performed the not a double spend because it's not on two different chains, but performed the attack on the testnet. So Constantinople was pulled off the day before it was supposed to come out. Unfortunately, some people didn't get the memo and upgraded to Constantinople. So there have been double spends from the last that I heard from the Ethereum chain. I don't know if this is fixed yet. So don't throw tar on me if I missed the news this morning from the super secret awesome Ethereum development IRC that's hey guys, we went out and ran over all the Ethereum miners that had upgraded to Constantinople, and those guys were stupid, and so we just run over to their house and just lit their computers on fire. Those guys are out of here, and we didn't even like them anyways. But some miners did upgrade to the Constantinople fork. Didn't get the memo, apparently. They mined that chain, so there was a chain split on the Ethereum chain. So there are two forks. Replay attacks were possible, okay? So I'm not moving anything. Well, I actually don't hold any Ethereum right now. But if you got Ethereum, probably shouldn't be trying to send it anywhere, because if you send Ethereum somewhere and the chain split hasn't been resolved, and it could, and again, it could have been resolved by now, okay? I don't know, all right? I'm not in the Ether IRC board, okay? I'm just in the BitMEX troll box. But there is a danger of you could get double spent on, okay? So if you send Ethereum, you can lose your money, all right? If the chain hasn't stopped, if whoever is mining that chain hasn't stopped mining that chain, if people are still mining that chain, if there's a small majority that are mining that chain, you can get double spent on. You can get a replay attack. So be careful. I wouldn't recommend sending your Ethereum anywhere, but again, not a financial advisor, not an Ethereum advisor. Do your thing, man. Let's get into the price. 30 minutes into the show? Sounds good. Let me check with the chat. Did anybody go crazy? If I check the chat's probably just going to say, shut up and show me a trade. Okay, let's do that. Nah, I'm going to look at the chat, guys. Joey V, good morning to you, man. Glad to see you, man. Wick City, babe. Christian Martinez, good morning. Jürgen Ernst, very glad to see you, man. How are you doing this morning? Good morning to you, Jasper, man. Yes, I fixed the loud music. Thank you so much. Jay Constant, man, how are we doing, man? No panicking, dude. Pod Nuts, hey, man, very glad to see you. Very glad to be back, man. Oh, I broke the music again? Oh, okay, so, Jasper, thank you, man. So I fixed the intro. I fixed the Be Right Back, but I guess I got to fix the title slide, the introduction title slide. So sorry about that. Sorry if I blew out your eardrums. I will fix that. Hold on a second. Hey, Google, remind me to fix the intro slide audio in 2 hours.
Okay. Do you want
All
to
right.
say this?
Yeah, go ahead. All right, so Crypto Mood Swings, what's up? Scotty Ogden, what's going on? Crypto House Hans,
Sorry.
Hems,
Do you
Kurt.
want to say receive this reminder.
I said yes, you automated, centralized, authoritarian person.
Okay, yes, you automated, centralized, authoritarian person. When do you want to be reminded?
I quit. Somebody send me a message in the Discord. Hans Hemskirk. Hey, I am all good, man. Warith, Celine. Hey, Warith. Hey, how you doing, man? Yes, Alex crushed it. Thank you so much, man. Jake Constant. I'm going to answer that when we get into the, where's the word I'm looking for? Analysis. Jake Rezio. Let me read this. So Jake says, I bought 1,000 each of Bitcoin Cash and Ethereum when they were both at around 150. Okay. I'm currently down 300 overall. Dollars, Ethereum, Bitcoin. Oh, I see what you're saying. Should I take the loss and reinvest in something else or wait and hope for a rebound? So this is something that I got to do because as the channel grows, people look to me a little bit more for advice, and I'm very humbled by the advice. So I'm not going to give recommendations for what to do with your money. I will look at the charts as I see them, and you can take your information based upon that. If you're interested, you can always join the premium trading group where I do not tell you what to do with your money, but I show you the trades that I'm making. I teach you my risk management strategy. I teach you my trade strategy, and I show you how I approach the markets. Good advice, James Glenn, and good to see you here this morning. Hey, what's going on, Ryan? Good to see you in the chat, man. I see you over there. Dretho. Liberty says, I once paid $20,000 worth of fees because I was new to crypto. Damn, man. Tabitha Moore says, I'm not going to do that, man. I'm not going to do that. Mr. Reginator, does anyone invest in BAT? So I don't have any long-term altcoin positions right now, and I won't until Bitcoin breaks fundamental levels. But BAT is one I'm keeping my eye on. So I think, I'm not sure yet, but we should be a Brave verified publisher now. So I think that if you don't like the ads on YouTube, and again, sorry, but we got to keep the lights on here. I got people that I have to pay. I own a business. Then you can watch us with the Brave browser. And there's actually a link. It's on our Discord in the referrals link. You can, if any of you don't know, we have a Discord and we have a affiliate like referrals link section. And again, you don't have to use them. They do help us out a little bit, but they often help you out. You can save, it's just this basic stuff. You can get like $10 free on Coinbase. You can save on fees on Binance, things like that. Right. So you can check that out. I think that if you use our link, you get some free BAT. I think you get the free BAT anyways, but if you want to support the show, we have a Brave referral link. And you can, if you want to tip like $1 or whatever worth of BAT to us, then if you're using Brave browser, I'm pretty sure you can watch the show without ads. I don't know. I just did that like a week ago because somebody was like, hey, I'd like to donate BAT to the Twitch stream. And I was like, hey, that's great, man. Thank you. And he's like, well, and I'm like, yeah, okay. And he's like, no, you need to go do the thing. So I did the thing. Anyways. All right, so Jasper, shut up and sell me a trade. Yes, thank you, man. Tenacious V. Tyler says I'm just here to listen to you talk shit to your computer. Thanks, brother. Hey, yeah, right. What's going on? Let's see here. Hey, Fox Trader. Good morning, man. Good to see you, man. Let's see. Diego says it's a little off topic on the daily chart of VET. There has been a 7 EMA crossover on the 25. This is considered extremely bullish, right? Yeah, I mean, if you're trading EMA strategy, your lower EMA crossing over your higher EMA. So whichever one, or I almost died. Your faster EMA crossing over your slower EMA is EMA crossover strategy. That's your call signal. That's your buy signal. So I use EMA cross. So I have EMAs on my chart. But I use EMAs more for confirmation of resistance levels because I do prefer to rely more on horizontals, and I also prefer to rely more on sentiment data for entries or retests of key, again, horizontal levels. Diagonals, I pay attention to them. They are important, but I put primary importance on horizontal support and resistance and volume as well. I correlate horizontal support and resistance with especially the volume profile, nodes of high volume, because again, I talked about correlating horizontal support and resistance with volume. So you have an important level, but you have to make it non-arbitrary by proving how interested were traders at that point in time at respecting that level. And then if that level happens to correspond with an EMA or a crossover in that area as we're crossing key level, it's a secondary indicator. So yes, but I'm going to feel like, it's not going to feel like it is. But in my experience, altcoin like big booms and altcoins lately have been fault like, again, I haven't, what's interesting? Let me see if I feel like an idiot right now. So we're going to go look at AGR or actually rep. You guys didn't see that. So rep actually still holding in there. So this is one of the few. So Augur, one of the few that actually pumped up and has not just collapsed all the way back down yet. That's BTC. I'm just gonna look at this for like half a second, guys, just to see what's going on, and then we'll go back. Yeah, so this is my range on VET. Enter here, sell here, enter here, sell here. We're passing, I can't trade this, man, because enter here, sell here. You break this level right here, you break my resistance zone. Okay, cool, and then I'm down to ride. You are getting the Fisher crossover above the 0 line. Okay, that's a bullish call signal. You're coming up to your 55 EMA, which again, now I can say, look at where the 55 daily EMA is. That is corresponding with my horizontal resistance zone. So I can pay attention, and I see the same thing you are. I'm using the 8 and the 21. Yes, I have the cross up, but I need that level to close above the horizontal resistance zone, above the, you guys can't see me pointing. I don't know why I'm pointing at my screen. You guys can't see my finger. It's stupid. Needs to close above the consolidation zone right here because I'm not seeing anything significantly different in the market. Whoa, go baby, go. Never mind, go all in. Enter now. Just kidding. No, I just want to wait. So if this does break out, it'll spike up. I'll wait for a pullback and enter that way. But interesting trade, interesting call. Good looking out. We're going to put a pin in this. Hey, Google. Try this one more time. Hey, Google. Remind me to look at VeChain in an hour and 30 minutes.
Sure, I'll remind you at 2:14 p.m.
Thank you. See, sometimes we get along. Sometimes we don't. I really wish I could change your voice to something, I don't know, a little more sultry. I don't know. Anyways, so we'll keep an eye on Brave Browser. I had to go down. So 24-hour chart. We do got some good things coming in. We are at that resistance level, so be cautious. I don't long resistance, right? If I do see it, now you can, right? But it's just not my personal preference to long resistance. I will if the market's right. So I don't know if the market's right yet. Still like very, very speculative on altcoins because they're going to go on a bull run, most likely. And when they do, there's plenty of time, right? So, show up to the party late, leave early. Because generally, when you show up to the party early, you get your head chopped off. But showing up to, buying support, look at the dips down here. You see where I've got the support level. Buying down here is good because you're trading the range. Buy here, sell here, buy here, sell here, buy here. Should be selling here. And then we'll reevaluate. So it becomes a different scenario if price closes on a higher time frame above our resistance zone, pulls back, and establishes that zone as support. Now we have validated the breakout. We're good to go. Now, does that mean that if you trade conservatively like that, if price pumps up here like 14, 15%, and then comes back down and just keeps going down, you missed a trade, but you didn't lose money. And I would prefer to not lose money than miss a trade. So don't take that as any negativity of your analysis. I do think that this is an interesting chart, but for me, I need to just wait up and see because there's a lot of selling pressure there. And yes, we do see that price does spike up here and forms evening star candles. So if you were expecting that particular pattern to return, you could be looking at a 7% trade on the table right now, but it'd be a very tight intraday trade. So you'd want to go down to your hourly or your 4-hour, you'd want to go down to your hourly, not your 4-hour. Your 4-hour would be too long in this case if you're trying to scalp the spike of the evening star. But that didn't happen the last 2 times. And so 1, 2, 3, 4, 5. More times you touch resistance, the weaker it gets. But Do got to wait for a little bit more confirmation. So let's get into Bitcoin. I got some interesting stuff to talk about. Hey, if I post a VeChain trade in the premium subscriber section later, they're gonna freak out. I just don't want to, Anyways, moving on. So we're gonna start off on the weekly time frame. All right. So what happened last week? Let's zoom in here. Let's talk. Let's talk. So this is last week's candle. So I left on Friday, came back on Sunday, didn't do any active trading. The market did all my active trading for me. I told you that of the 3 positions that I have open right now. Oh, you know what? I do. Sorry. Let me rephrase that. My bad. That's just MEX. So I would have had. Yes. Yeah. Okay. I do have 2 more open positions. My bad. The subscribers know what I'm talking about on Binance. Okay. So we do have. Bitcoin opened last week at 35.17, closed at 35.36. So 0.5%. All right, 0.5%, moved about $20 from open to close. Okay, so yeah, for a historically volatile asset, let's not get over our skis, guys. Let's wow, oh my God. The situation, really remains the same. There's a couple areas that point out to me. Bitcoin trying to make up its mind on where it wants to go in the short term on the higher time frames does not look positive for the bulls. Okay, does not look positive for the bulls. But again, I don't short support. Okay, I wait for confirmation of a breakdown and then you short that. You don't short support. Okay, you get wrecked. You look for opportunities for a bounce off support for a better average entry, but you don't short support. You just don't. Now, we barely closed inside the support zone that I had talked about yesterday, and I am measuring the current support zone off where we haven't broken down from, and that is the high and the candle body open of this previous bearish candle before the rally up to really retest 4,000 and really throwing us up into this tighter range. So, Bitcoin still overall, here's the TLDR. Bitcoin range bound between 3K and 4K. No time to take long-term directional positions. You wait for the breakout above 4K to go long. You wait for the breakdown below 3K to go short on weekly bases. And until then, if you are trading like an institution, you are long and short. All right. I get it, like, from so many people, like, that's the most dumbest thing I've ever heard, right? But when you have $250,000, $500,000, $2 million, you hedge because you don't want to lose your money. You would rather lose a trade than lose your money. It's that simple. And if you don't want to be in a volatile asset, then go into cash. But the problem with that is that a lot of people don't want to sell their Bitcoins. They're quite comfortable with the amount of Bitcoin that they have. They have accumulated these Bitcoin painstakingly. Okay? So, you're hedged. Now, if you're not positionally trading, if you're not trading like an institution, and if you are day trading or intraday trading or swing trading, then you are looking, you're not looking for a directional position right now because we don't have confirmation of a range break. You are trading the range. Right now, we are in a stuck down equilibrium zone and you're waiting for this direction to break. Okay? It's very simple. Don't get crazy. Don't get excited. Volatility will come. Okay, so we barely closed inside the support zone, although we did, on an intra-week basis, on the previous week's candle, we did trade up as high as a 50% retracement of this bearish candle right here. Make sure you guys can see what I'm talking about. Yes, okay, good, you can. So we did trade up to a 50% retracement of that candle, but we weren't able to hold that level in any supportive way. Bulls not showing a lot of strength. The only strength that the bulls are showing is that they're not letting the market tank yet, down to retest the early lows. Previous yearly lows. But the fact that they're just holding price as support is not necessarily an indication of strength. And you do hear that. No, strength is the bulls if you want to take a bullish trade, strength is the bulls taking hold of the wheel and pushing price up. So yesterday we had some nice bullish movement. It was looking exciting, but on a higher time frame basis, the bulls were not able to hold those levels, and the bears can attack at any moment in a bear market. So the current week is now open. Of course, happy Martin Luther King Jr. Day to everybody. Now, do not take this the wrong way. I highly respect the work this man did, but I do also have a dream. I just have to use the reference that one day we will no longer have to explain to everybody why we are so excited about magical internet money, where this magical internet money meme will be as ubiquitous as free Wi-Fi. But, and I know I used this joke earlier in the chat, but Burger King has got to get their shit together on this free Wi-Fi. Now, I don't eat fast food, but sometimes I park when I'm driving and I want to use free Wi-Fi. McDonald's usually has got me covered. Burger King, like, come on, dudes. It's 2019. Get your shit together. All right. So short term, we were able to close above the lows of our previous bearish week. However, momentum still remains with the bears. So the weekly is currently a green candle. Let's double check because it was green when I started looking today. Actually, the current weekly candle is absolutely no sliver I can tech. So what's the current price? Current price 35.37 because you can't see, because I use white and black. So sorry. So opened at 35.37.42. Currently 35.37.28. Oh, we've moved 14 cents. So it is a red candle. All right. So a good strategy is whatever color the weekly candle is, that's the direction you should be trading. So, but if we're talking about a 14-cent differentiation, complete indecision from the market right now. Let's see here. Yeah, I just talked about how Bitcoin is range bound. What that means is that midterm trend, so if you're thinking 1 to 2 months out, you're still hedged. You are still hedged, man, for positional trading. Resistance has not moved. Resistance is still the same, 3950, 4200 zone on the weekly time frame. Denoted, again, I've measured resistance as the equilibrium candle. That in an equilibrium candle is a break in market structure. So we have a prevailing bearish trend, okay? We have a brief pause in momentum. The market moves down a little bit lower and then moves up to fill that gap, moves up to test that zone because at this level, the bulls sensed weakness in the bears, okay? Because the bears are just, pardon my colloquial, but running train on the bullish agenda, all right? Shout out to Alexandria Ocasio-Cortez, but good luck with your, she's supposed to be a progressive, but she wants to quote unquote that on the progressive agenda. I don't know. So coming in as a conservative, obviously not a huge fan of people who don't understand economics, but whatever. I digress. So we have we have bearish momentum. We have bulls showing strength here. The bears take back over, but the bulls were like, wait a second, we got a sucker punch in on you at that level. So we're going to go back up and see if we can break through that chink in the armor. The bears are like, nope. Price moves back down, but holding that previous weekly support level right there. So we'll wait and see. We'll wait and see how this breaks. Everything pointing to the downside, but it would be stupid of me to tell you that we're going to 3K because we don't have any confirmation of that on the weekly time frame. Now, when we go down lower, I can give you my bias for trades based on this information. Again, you got to start small, move your way down. Let me see if I took notes here. I just want to make sure I don't forget anything. Yeah. So I want to point out what the Fisher's doing right now, and this is interesting to me. So the Fisher is looking like we're going to get a cross under, a bearish put signal. And the last time that we rejected, that's also a top below zero. That's an extremely bearish sign. And the last time that we rejected from the neutral zone, right here. So we just kind of consolidated below the zero line right here on a weekly basis. And really the Fisher was not giving you, well, really right here. It did give you your initial signal right here. So it gave you your buy signal. The Fisher would have had you in the market right here on that candle right there. Would have had you out of the market right there. So if you were, again, you can't, so if you're just trading the weekly Fisher crossovers in a market that kind of moves this far, you don't want to just look at the Fisher. If you take the trade on the Fisher for confirmation of something you see on the daily, then you're going to look down to the daily to get out of the trade. So the daily would have had you out of the trade probably somewhere around here. You also had other elements that you could have looked at as well. As you can see, you could have taken the close as soon as the daily closed below your 21, whatever. But the last time that we rejected from the neutral zone right here, right, where the Fisher just stalls underneath the zero line for a long time and then actually begins making a move, was right here, was on that candle right there. And the momentum, obviously, that we know of that move was a 50% drop in price. That's what we saw there the last time that we rejected from the neutral zone. Now, the technicals are different. The order books are different. The sentiment is different. I'm not saying that we're going to drop 50%. That's not what I'm saying. In fact, I think it would be hard for us to break 3K at this point in time. But we don't have the bullish momentum yet, is what I'm trying to say. And we are about to get the weekly cross under. So we'll see what follow through we get from that for the larger traders. That is what you want to be keeping your eye on. Very little volatility to speak of today. We're on intraday consolidation, as we'll see on the lower time frames. Let's go down to the daily. Oh, one other thing that I wanted to point out. Let's go back to that weekly for just 1 second. I'm going to switch over to Heikinashi. so we can see the averages. As you can see, the 8 EMA just completely suppressing price, right? And again, the EMA is a secondary indicator. Price action is your primary indicator, and volume is also your primary indicator. But look at, just look at how effectively the 8 EMA has just completely suppressed price. The first time, as soon as we get a weekly open and close above the 8 EMA, and again, I'm horrible at jokes. I made this joke earlier in the premium channel. The trumpets and fanfare that will revolve around that happening are going to be like the Lord of the Rings at the end of the movie, and not like when Gondor was charging the troops of Mordor, more like when Sauron was dead and everybody was like, "Fuck yeah." Scott, my bad. I know that's twice. I know I need to work on that. Let's see here. So yeah. The Heikinashi, so looking at the averages of what's going on, actually looks more negative. Why? Because we actually have increasing momentum. Because this week just opened, and we have bearish momentum, increasing bearish momentum because we have a larger candle body, and then this candle has only been open for a week, and we see the same thing. So, all right, so moving right along. Down to the daily. So if we zoom out, while I was driving yesterday, I got a lot of texts and notifications like, "Oh my God, the market's tanking." We just reverted to the mean. We just reverted to support. It wasn't good for the bulls, definitely not. Definitely good for the bears, but there's a lot of doomsayers out there right now. And again, the market can do whatever it wants. Of course, we can just drop right now, but we don't have confirmation of that. We have to look at some technicals for that. We have to have some justification and reason for that. So again, we just had a reversion of the mean and return to support. The current consolidation range is still overall holding. We haven't had a daily close break of the range, which is what I look for to confirm kill a range break. So support has not broken. Let's see here. Yeah, price hasn't been able to make a convincing break of the range nor form a higher low. In fact, we actually retested below previous lows. If you're looking for something like an SFP, which is not what I'm saying this looks like, it doesn't. But I'm just pointing out that we actually did, look at that right there, we did actually trade below previous lows. So we retested below previous lows. So as you can see, so this level right here, the green line of weekly support, 35.50, the weekly resistance at 36.40, the range. I was looking at these for a while, again, talking about how I wanted to see the weekly close outside of them, the daily closing outside of them. Again, I said we were looking for that too. First indicator, we were unable to get above, look, so yes, we did close a daily candle. Let's see, so this would have been Friday. We did close, no, this would have been Saturday. We closed Saturday's candle above the resistance zone right there. But, I mean, look at the structure of that candle. Extreme resistance from the bears. And then as soon as you trade below your resistance line again, the point of control is right there. Your 8 EMA is right there. Do your 8 EMA breakout, but rejection from your 25, and then just right back down below your point of control. Yes, you do get excited when you get this first close above the 8 EMA, but there just was no follow through. Should you have entered into a long on this? There's a lot of technical reasons that you should have. But again, you don't often look to long resistance, longing the breakout. You have to understand that when you long the breakout on the breakout, that's a higher risk trade than waiting for the pullback to retest resistance as support. If you do that, you're going to miss more trades, but you're going to lose less money. Simple. All right. Both strategies are applicable depending on the underlying market. All right. When the market is so indecisive as Bitcoin is in this weekly trading range, probably not the best strategy, but I don't chide anyone who did take the long on the break of resistance, right? They didn't wait for the pullback. They got over their skis. It's okay. These things happen, right? You're managing your risk by going down to your lower time frames. Let's go to the 4-hour chart. So where would we have taken that trade? We would have taken that trade here on the close of this candle, or if you were actually watching this on the intraday time frame, on a lower time frame like the 15 or the 30, you could have had a chance to get it anywhere around here. You're watching this point of control. You're watching for this horizontal right here. You just get a big volatile movement upwards. There's another aspect of this too, which is when the market is range bound and you see a high volatility movement like that, you're typically trying to counter trade it, but it's risky because sometimes it can be like trying to pick pennies off a train track. if the market's going to continue going up. This is why you get into too risky scenarios when you're trying to enter on high volatility, because the opportunity for the market to move when you enter in high volatility, if you see it, and this is a good strategy, like I know guys who are very successful with this, and I do this, right? But I prefer to have it more planned out. So I use VPSV to do this. So I'm looking for key areas where we're likely to get that big rejection after a high volatile move. So, and this is also why if you think that the market's going to go down, but you want to take advantage of spikes, you're going to set some short orders up in the order book. You're going to set some buy orders if you think the market's going to go up, down, real low blow up price. It's a good strategy. At least to have alerts for those levels. But if you only set alerts there and not buy orders, they're probably not going to get filled. But because by the time your alert goes off, the market's already gone through and moved through that area. And it's 1:02 already. I've been talking about Bitcoin and news for like an hour. All right, so Jay Constant, so you're saying we should use you as a leading indicator? We're going to make a channel in the Discord. Jay, when you go into Tether, we want to know, because that's when we're going to go long on Discord. Guys, I want to do something nice for the 1-year anniversary of cracking cryptocurrency. Like, I completely biffed it because really we started cracking cryptocurrency in September of 2017. So we are officially 1 year old. Yay. But we didn't really do anything for it. There wasn't a lot of fanfare. So I probably do want to do some kind of giveaway. I'll probably be giving away a few weekly subscriptions, or excuse me, one free week in the premium trading group. I'd like to do that for you guys. I like to give back to the community. So we'll probably do something like a sub push for that. I'm going to talk with Scott about it. So when we're going to do it, because the last time we did the sub push, thank you so much, by the way, to everybody that subscribed to the channel. Highly appreciate it, guys. But when it actually came to the, like, picking the winner, like we didn't have the infrastructure set up. We didn't spin the wheel. We just, like, I should just have a D20, just roll the D20 and you guys can see the D20. All right. So sorry, I want to continue talking about the 24-hour chart. And I'll tell you what I'm watching for. So, still trading in that range of weekly support and resistance. We're coming up to it. I expect we're going to trade back into it right now. If we don't trade back into it on this daily time frame, then that will be a close below and rejection of support. And that's when you can go ahead and enter into the short. But, well, actually, I'll talk about the 4-hour time frame if you want to be risky and go for one now. So, keep in mind today's a holiday. The CME and CBOE is closed, so I'm not really expecting a whole lot of volatility today. I'll go over to the CME chart because the CME did close down on a gap. So there is a gap, and again, gaps don't have to be immediately filled, but there is a gap around 36.50. So if I was looking for a short after a bearish movement like this, where price has rejected the breakout, the overall trend is to the downside, everything's getting squeezed, more than likely the sentiment is to the bears. All right. So so if I didn't say that at the beginning, let me posit that. The dominant trend hasn't broken. The current trend right now is to the downside. If you're looking for a trade to take, you're safer in a short position, period. Until you get confirmation that resistance has been broke, that range has been broke, which didn't happen here because the confirmation is the break and the retest. Okay. Or if the retest doesn't happen, like the break, and then if price breaks a higher resistance level and then holds that level, well, come on, guys. It doesn't have to come back down and retest the resistance level it didn't support. More than likely, when price eventually comes down later, because it will, that level will hold as support, at least on a retest. So those are gaps, right? When resistance is broken and not retested, those become critical areas later. They don't have to be tested now, but often they do. When you're looking for a breakout trade, it's more conservative to wait for the retest. And again, like I said, you're going to miss some trades, but you're also going to lose less money. So still hedging, stop losses, 1 ATR, above swing low, above swing high, below swing low, both directions. You reduce the losing position and add to the winning position. That's the simplest way to hedge. There are more nuanced ways to do it. You can look to diversify your portfolio. You could take an up-down contract. Don't do that because they suck. BitMEX sucks at options. You could go over to Deribit and open up some options. I think that's probably going to be the best way to hedge your risk in the market right now. Or you can just use one contract to go long on, one contract to go short on, and day trade on XBT USD. Seems pretty simple to me. Sorry. So just as we saw on the weekly time frame, look what the Fisher's doing right here. The Fisher is rejecting from the neutral zone. The Fisher gave you the bearish crossover on this candle. No duh. The Fisher's measuring price action like everything else, but it's doing it a very specific way. Don't have, well, we're not bottoming, so there's no bullish divergence, and there's only bearish confluence right now. So there's no divergence to speak of on the weekly or the daily, actually. But we're rejecting from that neutral zone. And if I adjusted the settings on the Fisher, let me see what settings I am using on my Fisher. So if I adjust this to 9, it is going to be rejection below the zero line. Okay. Now the default settings on the Fisher are going to give you the 7. Those work very well for some people. I use the 9. Obviously, I have my chart set to the 9, but you do want to be adjusting depending on, again, there's no right way to do this. You want to adjust the Fisher because the Fisher is giving you unique information. You want to adjust the Fisher to get the correct signals that are congruent with your trading style and approach, right? So if you're looking for oversold conditions to buy, adjust the Fisher so that your overbought and oversold crossovers or zones are very accurate. If you're looking to trade the Fisher in a more nuanced way, like I often like to do, consider trying 9 or some. You can go as high or as low as you want. It doesn't matter. You can't go below 4, because there are other ways that the Fisher responds. It shows you the wave cycle of price action. It converts price action into a sine wave as opposed to a square wave. So, and it does some fairly unique things given that value proposition. So when the Fisher rejects from the neutral zone or tops below 0, it is often a very bearish indication. When it bottoms above the neutral zone, when it bottoms above 0, it's often a very bullish indication. And I use those as a tertiary indicator, actually. So we have primary indicators, tertiary indicators, or excuse me, primary, secondary, tertiary, okay, in order of importance. But I'm going to go back to the 7 because I'm looking for overbought, oversold. But just adjust the Fisher. Again, there's no right way to do it. There's no manual on it. I've had to learn this myself. The material out there on the Fisher Transform is not helpful for actual application to trading as far as nuance goes. There's a few videos out there on, like, this is the Fisher, this is how it worked. It go over here when you're overbought. But it's helpful if you get a little bit more nuance with it. And that's what I hopefully try to provide for you guys. But yes, it's rejecting from the neutral zone also. And if we look at the 7, crossing below 0. So that is a bearish put signal as well on the daily. Very low volume on today's candle. So I don't really expect to see confirmation for a trade today. So I really see today as an opportunity to, again, I just got back. I'm in 5 actually, excuse me, because I didn't actually include my Binance trades. So 5 open positions right now. I'm feeling fairly relaxed. I don't have long-term directional positions. I told you why, because there's no reason to. There's no technical reason to be in long-term positional trades. Waiting for a range to break because that will be a nice volatile movement. Or you can play Wick City and get wrecked, which, I might hop on the 15 chart. Again, you can hop down to the 15 or the 1. And you can day trade this puppy all time long. Again, days like this, much better to do so. Days like this, better to do so. Days like this, it becomes a risk-reward ratio. Do I want to sit here and watch price crawl 0.25% in 3 hours? Probably not. There's probably more things that are going on, because when we see days like this in Bitcoin, again, there's a reason for this, because the markets are closed. Not a lot of people on the holiday. It's a vacation. It's a relaxing day. So you should look to take advantage of that yourself. Spend time with your family, maybe relax, read a book, maybe find some nice altcoins to trade. That's going to be the mission after the show. All right, so let's get another 4 hour because I do want to talk about some interesting stuff. A couple ideas here coming up. So 4 hour looks like it could be a bear flag forming. I'm not a chart patterns guy, but what is important is not to see a pattern. That's not right. What's important is not to see like, oh, it's a bear flag. That means it follows these rules. I've been reading Investopedia, and so what I need to do is measure from the. Hold on. Let me pull up Investopedia. Okay, so Bulkowski's Encyclopedia of Chart Patterns says that I go, 3/7 quartiles above. Come on, man, this stuff's crazy, dude. Fibs. If you want to get into measuring and see targets, pick up some fibs. All right. So, anyways, 4 hour time frame. Bitcoin is again coming up after closing beneath that weekly support level, right? And we've got confluence with our 8-period exponential moving average on the 4 hour time frame. This is a good place in my opinion to go short, because we're coming up on resistance, and this could be seen as a confirmed kill. So don't have it once. I know it's infuriating to people, but this is why I don't lose money a lot of the time. Once the daily candle closes and turns black or red below this line, you have daily confirmed rejection of support. Okay. And then you can go into your short position. That is most likely where you would first look to begin scaling out of your hedged long and adding to your short position. So you're starting to build the positional trade at this point in time. On the daily time frame, if you're trading this weekly range, if you're trading the overall range of 3 to 4K, this doesn't really change anything. Except, well, actually, you're doing the same thing. You're taking a little bit out of your hedge short. So look at this. One way to look at this is this. You're in a range. You're considering this the top of the market, where you want to be all out of Bitcoin and all in cash, because price is likely to reject from this area. And this is the bottom of the range. And at this area, you want to be all in Bitcoin and all out of cash, because this is seen as the bottom, right? And you want to buy the bottom, right? So you buy support, you short resistance. So, and when the range breaks, you reevaluate and you switch that around. That's why you don't have all your capital in a positional trade. But that's a fundamental way of looking at it. So daily candle closes, turns black. We're done. Breaks back up into the range. We continue in consolidation until we get a break. So watching the 4 hour chart, if you wanted to jump the gun, this is the area to short. What is your confirmation that you were wrong? When the 4 hour candle closes above your 8-period exponential moving average, because that is your current resistance zone. You could be, if that happens, then you're looking pretty much to do the exact same thing with the 21 and the local point of control, excuse me. So if I take this data in, if I take part of the dump in, the point of control moves up. If I just look at the consolidation range itself here, point of control moves down. So you've got your 21 coming in right there, right at previous support, which is going to turn into resistance, that broke through as resistance. So it got tested here as support, and has not been retested as resistance. That's also where your point of control is. It's where your 21 exponential moving average is. So a couple risky ways you can do this in descending amounts of risk. You go short now. You put your stop loss on a 4 hour close above the 8-period exponential moving average. Or you could look at it differently, which is you have an HVN here, and your stop loss is here, okay? But there is another way to trade this, which is a potential gap trade. So you could actually go long, assuming the breakout, set your stop loss probably 1 ATR below the low of this candle. Or if you're taking a breakout trade like that, you actually need to set your stop loss much tighter because it's a riskier trade. So your stop loss is either at the low of this candle or maybe at the open even. And then you're looking to fill this gap. As you can see, there's a shallow area of the low volume node, and you do have this gap trade up to the point of control and previous resistance that hasn't been tested as resistance. So you do have about a 1% scalp trade on the table to the upside. I think you have a more attractive downside trade. The R seems greater there, but again, if you want to take the short position on a futures contract, on an expiry contract, and take the scalp long on XBTUSD, gotta stay busy, man. A lot of us are sitting at home today looking for something to do. The secondary trade is to look for the short on rejection from the 21 EMA and the point of control, as well as previous support that needs to be retested as resistance, okay? Now, those are two scenarios. I'm not telling you that that's exactly what price is going to do because I don't know. But those are the setups, okay? Those are trade ideas with multiple levels of confluence with potential. Now, which one am I going to take? Premium.crackingcryptocurrency.com to find that out, as well as receive mentorship and support and more education. Sorry, guys. It's my company. It's how I pay my bills. Just here to provide you guys with information, teach you guys how to trade. Okay. Looks good. It's 1:17. I need to get some water. I'm going to run till 2. So give me 3 minutes. Let me get some water. I'll be right back. I'll actually let me look at the chat, man. Let me scroll up. I'll do the chat before I drop. I'll be back. I'm going to be back. I'm going to do this for another 40 minutes, but hey, BTC buyer, what's going on? Xantimus Crypto, yo, Justin, what's your take on the Ichimoku cloud? I think that Ichimoku is one of the best indicators out there. If you want, I mean, it just works great, man. It's just an all-in-one. It can tell you if price is ranging. It shows you where support is. It shows you where key turning levels are. Again, if you look at, I'll show you guys my templates. It's not like state secret. Templates right here. Ichi right here. Say Ichi FT. So that's Ichimoku Fisher transform. I use the standard crypto settings for Ichimoku. The conservative crypto settings as well. So the non-conservatives are to take all these values, except for 30, is to take 20, 60, and 120. They cut them in half. So 10, 30, 60 is going to give you more signals. So I'll show you that. 10, 30, 60 as opposed to the defaults of Ichimoku. You keep your displacement the same. So you're going to get more signals using the issue settings like that. But I use the more conservative 20, 60, 120. So you'll get it's coming to me. You will get less frequent signals, but more powerful signals that way. So yeah, I think Fisher transforms a fantastic indicator, man. In fact, one of the traders, he's on the team, man. He exclusively trades Ichimoku. He looks at other things, but Ichimoku is his go-to, and he kills it. Highly successful. You can follow him on Twitter at I am Fibonacci. Dun dun dun. Shout out to you, Shiv. How you doing, man? Hopefully you're doing good. Let's see here. A few more questions, man. Hey, Jay Constant, no problem, man. Thank you so much for the BAT donation, man. Thank you. Appreciate it, bro. I see you in here every day, man. And if you ever feel like I'm picking on you, I'm not, dude. I really appreciate the support, man. Thank you so much for watching the stream. CryptoCap, good morning, man. Private, Bitcoin technical analysis. My number for Bitcoin is 3380. We might go up short term to 3700. Yeah, we've got that gap 36, 37, 3650. No, stop it, Lifestyle Combat. That's not what I meant. Hey, Diego, thanks so much, man. Error code, good morning to you, man. Is $3,500 strong support? Will it hold for now? Look, I'm inclined to actually say no. The dominant trend is, remember these key things. Without a significant change in volume or sentiment, the underlying trend is unlikely to change. Have we seen a fundamental change? Have we seen a big change in volume or sentiment? No, we haven't. Longs are still high, shorts are still low. The more underlying trend is bearish. We've been range bound. We've got way more bullish momentum, way more bearish momentum than bullish momentum. If we were to look at something like, I don't think I have it saved as a, because I can just type it in. If I can type it in with click, 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 I don't save it as a favorite. If we look at something like DMI, and I always change DMI because I don't like the default settings. So I always change ADX to black. I always change DI plus to green. And I always change DI negative to red. Yeah, if we look at an indicator like DI, which is supposed to show us the strength of a trend and the bullishness or bearishness, I use it specifically in consolidation phases. But yeah, we see that ADX is below 25, which means that we are in a consolidation range. When price, that we're not trending. When price goes above 25 on the ADX, when ADX crosses the 25 line from below, when it goes above 25, it is an indication that we are going into a trending environment. And when you have, and there's more bearish momentum than bullish momentum. But again, and this is something I don't want to say I got into a, you know who you are. I'm not mad at you. The DMI is measuring price action. So you can look at, like, this is helpful. It really is helpful. It is. But it helps, I think, if you get rid of that and you look at this, because you can just see and understand price action that, man, it looks like Bear's got a lot more strength right now, man. You just look at this, yeah. Bear's got a lot of power. So it's dangerous to go long. It really is. It really is. I showed you a potential. There is, sorry, I got to pull up my, this is where I live. This is all I need to trade. I used to have the EMAs off there for a long time, but they do live on there. I do use them. I'll throw other stuff on here too as well, but this is where I live. This is what I do for 8 hours a day. Yeah, I mean, there's a potential trade on the table right now that does not. It you know, it honestly terrifies me to go long on this, but if you're bullish biased, like, that's what you do, you know. But don't long resistance, don't short support. But this is this actually looks like a good setup to me, but I would like to wait for confirmation. I'm not going to take the risk right now on this low volatility day. Actually, that's stupid. Let me rephrase. There's less risk to take that trade today. But yeah, as you can see, getting a little bit of that, we're getting that rejection from the ADMA. You get that 4-hour indecision, long-legged doji. It's not a long-legged doji. It just has long wicks to the upside, to the downside, long shadows, if you will. Coming up, we haven't gotten the bearish cross under on the 4-hour yet, but that is going to be a 1-bar lagging indicator. That's why I like the Fisher so much, even if you want to use it for none of its nuanced reasons. If you're just using it as a better stochastic, because the stochastic is gonna, you know, when it crosses up, man, I buy, and when it crosses down, you know, I sell. If you want to use the Fisher for that, as well as the other use of the stochastic or the RSI, overbought, oversold, it's just faster. Like, the Fisher gives you the signal faster, right? If you tweak the Fisher right for whatever you want it to do, you will only get 1 candle bar of lag. You will get the signal on the next candle bar. And if it's a fundamental movement, you're good to go. You usually won't get the signal on the RSI until 2 or 3 candle bars, depending on what time frame you're looking at. It's just a superior indicator. Okay. Chuck G asks if I can look at ZERP. Yeah, I'll look at ZERP, man. JV, thank you so much, man. Smash that like button. I appreciate it. First yen to Bitcoin stablecoin approved for Sandbox by Japanese regulators. Hell yeah, dude. Error code 503. So, hey, I love you, man. Thank you so much for the support. So other people, like, if this is, you know, like, my company owns this YouTube, so we don't, you know, we don't subscribe, you know, we don't do the sub for sub. It's not to not support the community. If you'd like to, if you got a channel and stuff, man, and you provide content, send me or Scott a DM in the Discord, and we love supporting the community. If you've got interesting stuff to talk about, if you'd like to be on the show, we'll check out your content, but you got to hit us up in the DM a little bit more personally and not in the YouTube live chat, man. Thank you. Do I think that wash trading leads to bullshit volume on Bitcoin, all in caps? So yes and no. So wash trading is increasing the supply. So the purpose of wash trading is this. The purpose of wash trading is to make it appear as if there is more liquidity to a coin than there is. And actually there is, because the volume is real. It's just coming from somewhere, usually from the exchange itself. And it's used to entice traders to want to trade a more liquid or volatile asset. Because if there's more volume in a coin, volume is measuring urgency, right? People are always buying and selling, but if they're doing it more, the volume is going to be higher because they're buying and selling more. And what volume indicates is urgency in the marketplace. So, what are the tweak numbers for Fisher on the 5-minute candles? Listen, and this is going to be a pain in the ass to hear, but I'm just telling you because I've been using the Fisher for a long time. I can't give you the right answer. Adjusting the Fisher is like tweaking an analog radio. It changes with every asset that you're looking at. It changes with every time frame that you look at. It changes based on if you're using Heikinashi or Japanese candlesticks or Renko or whatever. So yeah, you just have to manually adjust it, man. I reckon like 10 is the like international standard, you know. So if you use like between, and then there are two scripts. So the one that I use defaults to 7. 6, 7, 10, they work really well, pretty much across all boards. But you can go out, you can get whack-a-noodle, man, because I've found agency and usefulness in using 4, 12, the Fibonacci number, like so 8, 13, 21, 55. I know Alex likes to look at like equities or commodities on the weekly time frame with the Fisher, and he kills it using the Fisher on the weekly time frame, but he has it tweaked to a very custom setting, and it's basically predicted every key turning point, like in ZAO USD, on crude oil. It's his spooky action at a distance, man. Let's see here. Bitcoin is trash can scam, bunch of suckers. Who's the sucker? Like the dude who trades for a living and it wants to provide knowledge, or the person on MLK Day like trolling in a YouTube live chat? Moving on. Sorry. So Lauro, I had a few more nuances there. So yes, wash trading does inject bullshit volume, but it also does bring in more traders. So now there was more volume there to begin with. It's illegal. It's unethical. It's wrong. And generally there's more negative consequences than positive consequences. And exchanges do it so they can get more fees. Because if there's more trading, then they can, they rake off every trade that's made. So if there's not a lot of trading, then they're not raking a lot of cash. You know what I'm saying? So that's why they do it. That's why exchanges do it. But it can have like unintended benefits for the underlying asset if the traders decide to stay in the market. But it can also have unintended consequences, because if that like magical liquidity goes away, then hey guys, so I am going to take that 3-minute break that I said I was going to take 13 minutes ago. I'll be back in like 3 minutes, and we'll go till 2, and we'll finish up here, and I'll get back with the chat, guys. So take it easy. Don't go anywhere. Go get some coffee, relax, chill out, maybe get some water. That's what I'm going to do. See you guys in about 3 minutes. Thank you so much. And we're live, guys. Thank you so much for hanging in there. I appreciate it, guys. Is my mic working? Yes. Okay, good. All right. All the technicals look good. You know, it is interesting being... Scott calls me a Luddite. I don't think I'm a Luddite, Scott. Could be. I do want to... Scott, so I should actually be way more efficient. So Scott did upgrade my phone. I know you guys are watching like over the world, but... Wow. If you are in the Midwest area, and yes, like, is he my partner in the company? Yes. But is he like one of the sweetest guys who is a wizard when it comes to anything that has anything that runs off electricity? The dude can do something with it. He owns a he runs, on top of many other things that he does, a computer repair shop. So if you need anything done, Revival Tech Repair. So shout out. Okay, so first off, Gabriel, thanks, man. I appreciate it, man. Thank you so much, man. I highly appreciate that, dude. $13.13 donation. Einstein Unified Field approved. Sending you some spooky action from a distant Montana snowscape, man. Yeah, I bet you guys are hammered up there. You know, it was physically dangerous to stand outside my car for longer than 5 minutes. Pretty much my entire business trip. I mean, the drive, I felt like a superhero keeping the car on the road, driving up to Wisconsin. I mean, I don't know. I don't know how they do things. And actually, this is embarrassing because they do handle their snow plowing like much more efficiently. Again, I don't live near a big city. I don't, large accumulations of people. Bad things tend to happen when that takes place, and especially if you're at consensus. And yeah, so I prefer my not solitary. I mean, I live in a town. It's not like I live in the country. I'd love to live in the country. I used to. It's just better here, man. But thank you, man. I highly appreciate that, Gabriel. You're one of the good ones, bro. Um, thanks, Jasper. I did fix it. Yes, except I didn't fix the intro yet. I'm gonna do that after the show because if I click on that scene, then you're gonna get that split second of like really banging music before I slide the volume down. He left, so your Bitcoin's now. Market short. Market short. Diego, hey, thanks, man. I appreciate the compliment, man. Not a god, not whatsoever, man. Just it comes with painstaking experience, man. And I did want to comment on KJK said he joined the stream super late. Would I be able to do a quick summary on BTC? Like the video for you. Thank you so much, man, for that like. Yeah, I'll give you the TLDR. The TLDR is weekly doesn't look good, daily doesn't look good. You've got a 4-hour opportunity here to enter into a short. Your stop loss would be a 4-hour close above your 8 exponential moving average or this weekly support level at 35.50. Again, you're gonna have to port these prices. I'm looking at Bitstamp. You're gonna have to port these prices into the exchange that you're using. Again, I'm personally looking for confirmation on the daily for the rejection of this zone. What does that look like? That waits for the daily close and the next close and the next candle to turn bearish. If this daily candle moves all the way down and turns bearish, I will consider opening up a short position, but I don't like shorting support. I don't. I would prefer to see a push back up, and I want to point out that there is. Thanks, man. I appreciate that. So I want to point out BTC. Okay, now I feel like an idiot. I redid my watch list too. There it is, sorry. So CME futures. If we actually look, all right, auto mode, you're killing me. So let's see here. So CME futures gap down. Okay. This gap is coming in right around here, and you're gonna have to port this data over to the prices. The ported data, I already did that. That ported price is 3650, 3600. That is the range. So we did have a gap, and I'm not saying that this gap has to be filled. Gaps do get filled. We can reject from here. Again, the market is closed today. The CME futures are closed today because it is a holiday in the United States, but typically gaps do like to be filled. Now, we can still absolutely reject from here, but at some point in time, this gap will come back and be filled. So I would prefer to target an area like it barding up back to that 3650 area before rejection is the more likely scenario in my mind, but you do have to keep yourself open to what the market is going to tell you. So you do have to watch this. We're actually at a pretty important point. But the volatility that I expect to see today, I'm not expecting to see really anything today that is going to give me the real confirmation that I need. So I've described 3 potential short trades. Short right here, stop loss close above the 8 period exponential moving average on the 4-hour chart. Short trade from the rejection. When you get back up to that 3600, 3650, you can either enter the short at the 21 at that. So actually this is 3589, sorry. The 21 exponential moving average and your local point of control right there, stop loss, the exact same thing. Or the safer trade, that gap fill zone on the CME charts coming up here. That's actually where your 55 is and your previous rejection area right there. You have a little bit more confluence coming in at this lower level. It's the bottom of the HVN. It's previous support that has not been retested as resistance. I don't consider this a retest. I don't consider like long wicks that just like kind of like, no, I consider candles moving up there, like kind of arcing and then, scalloping back down. That's rejection. The alternative is the risky long scalp, which you could enter when price does close above the 8-period exponential moving average, or you'd be entering into it now. And that's the gap trade on the volume profile. That's about a 1% scalp trade, looking to take your profits on the 21, the point of control, or you're going to front run this. Again, you can't see me pointing at the screen. I don't know why I do. Or you could front run this volume profile and just trade this gap trade. But again, with where we're at a resistance zone, below support, it's a risky trade, and you would want to set your stop loss either here at the low of this candle or the actual open of this candle. So that doesn't seem like the best probability trade for me. Xantimus Crypto says, just tell me how much it costs to get the info, bro. Hey man, would love to see you in the premium trading group. My door is always open. But the reality of the situation is there's no efficient way to tell you what set. Again, there's two main ways that I use the Fisher. One is for overbought, oversold, like optimized for overbought, oversold to get signals only with only one bar of lag. And then the other way that I use it is to optimize for what the wave is telling me. So topping below zero or bottoming above zero, and having it set to those parameters. As well as divergence is also the secondary benefit of that. Well, maybe a primary benefit, because divergence is powerful on the Fisher transform. You just got to play with it, man. Just got to play with it. You just got to adjust. If again, hit me up in the Discord, man. I'm happy to help you out, man, and walk you through it if you're struggling. Yeah, I've charted the inverse chart, man. What's my ATR entry strategy for shorting? You're going to have to... yeah, the road's less traveled for sure, man. Absolutely. It's hard to find confirmation on any trades right now. The top 6 coins are all just in a range. You're right. Yeah, absolutely right, RJ. I've charted the inverse chart. Yep. But it's kind of novel. It's just like, it's not a huge, what's the word I'm looking for? I don't see a lot of benefit to it. It is beneficial if you have a, it's useful to like try it if you feel that your issue is having a bias one way or the other. If you feel that you're not chart neutral when you approach a trade, if you feel like you have an irrational bullish or bearish bias, charting the inverse can help you out, because you'll often that'll often help you be more picky with confirmations. And what is my ATR entry strategy for shorting? Well, if we're in consolidation, basically the exact same thing. I pick the time frame I want to take the trade on. I figure out where my median is. So in this case, most likely I'd be comfortable with using like the current price. And I would look for, so I actually need to throw ATR on here. The reason that I throw it on is because I just normally don't like it cluttering up my chart. So ATR $44. So you measure up $44. That's entry 1, or even primary entry. So that's taking you up back there to that that secondary short entry I was telling you about. And then you measure up $44 from there. And that is actually taking you to that gap fill zone, as well as the 55 EMA on the 4-hour chart. And then your stop loss is 3.5 above. So in this case, if you are looking to go short here, you're expecting rejection from this area. So you can use 3.5 as your stop loss, which would be putting you, so 154 would be your stop loss from current price. So 35.43. 36.97. And that's your stop loss. So you're entering here, your stop loss is here, and to justify a trade like that, you're going to have to go to your daily and figure out what is your target going to be, and is your target going to be worth the risk to reward ratio there. In this case, you would definitely be shooting for this as a target, the top of the HVN. Previous resistance untested as support, which is, so this zone right here, this little bitty baby right here, that's going to be the next target for a short trade. So let us assume that we say this is our target. Previous, oh, why did I do that? Undo, stop it. That is also front running a point of control. This point of control, this previous point of control here would also be acceptable, but I like to front run points of control by using the tops of HVNs. And then you have this target right here, which is also, as we can see, front running and previous point of, not a point of control, but front running the real HVN down there. I'm front running that entire HVN area. So we've got targets right here. So now let's go back down to the 4-hour chart because we did talk about creating our analysis here. And we have entries here and here. So let's give us a median zone. So if you're just doing 50% entries, that's going to give you an average entry right about there. So we've got 2 take profit targets. We're going to measure the risk to reward ratio. Again, 36.10 is going to be our average entry. So entry price 36.10. Our stop level is 36.97. And our take profit 1 is 34.30. Gives you a 2-to-1 risk to reward ratio. Great. 32.67 gives you a almost 4-to-1 risk to reward ratio. So yes, that trade is worth it. And does it meet qualifications for your trade? That depends on your trading strategy. So I'll go ahead and, oh, you know what? I'm going to go ahead and leave that on the chart for now. And we'll just see how that baby plays out. I like it. Okay, so somebody asked me to look at J Constant. No, the stream did not end. Do you see divergence on the Fisher? Yes. Yes, you do. Darius Souza, 2.8 or 4.8 first? Most likely 4.8, honestly, if I had to trade my opinion. But my opinion is that I don't know. Those are good targets, but the range hasn't broke one way or the other to let me tell. I think it's very unlikely that we break below 3K anytime soon. There's too much liquidity down there. It would be an SFP. It would be a stop loss hunt. It would be tapping into liquidity. There's too much interest in buying, man. There's not enough supply. Supply is petered off. I find it highly unlikely that we break below 3K anytime soon. But that doesn't mean that we're going to 4.8K anytime soon. You know, we can go sideways for a very, 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 very long time. And whether that becomes accumulation or consolidation, we have to wait. Right now, one would be biased. So let's look at the daily chart. Let's look at the daily chart. And you tell me if you think there's more bullish or bearish momentum starting here. Okay, so this is where the dump pretty much ends. We have equilibrium on a daily basis. So that's that weekly equilibrium block that I'm pointing out that measures this. Actually, this is the daily, sorry, this is the daily equilibrium zone. The weekly equilibrium zone is wider because it's a longer time frame. And you tell me if you think that there's more bullish or bearish momentum in this area. And while you're thinking about that, I'm going to pull up ADX. And I just hate these default settings, man. Well, overall, there is more bearish momentum. So again, we said we're starting here. All right, so clearly more bearish momentum. Doesn't take a genius to see that. Look, there's nothing but dumping. And then there's nothing but pumping. Green DMM. And then just a complete battle between them. So there is no person in the world who's going to tell you which way this is going to go. But I'll do my best. I think that based on other technicals such as order book analysis, such as sentiment data, such as psychological levels, other than that, really, so looking at bigger picture stuff, I think it's very unlikely we go below 3K, at least on the first try. I think if we go down here, fill in my bags, going long. And there are some things that need to happen for me to change that. Maybe that will be in the daily analysis tomorrow because I've only got 9 more minutes in the show. I think Tether's going to the moon very soon. Nope, I'm still here, man. So I did get one request to look at ZERP, so I'll look at ZERP. Let me... I'm going to look at... so you asked for ZERP USD, so I'm assuming you're trading on Finex, so I will look at ZERP USD. Now, I probably shouldn't say that. I think I'd probably piss the subscribers off because that would basically be giving away open positions. So I will not talk about how because I do have a ZERP position open, but I cannot in good faith disclose it because that is information for paying subscribers. So I'm just going to do my best analysis and maybe we can figure out what it is. But I can tell you it's not on the sticker symbol. UK. I want to put the trend line on here that I think is important. This one right here. Come on, baby. Don't let me down. Thank you very much. Oh, come on, God. There we go. I like that. And I don't really see a need, actually, to do that like that. Sorry. I just want to make this Finex chart a little bit more congruent to my chart so I feel more comfortable analyzing it. Because I'm used to seeing certain things. Okay. So, overall, came right back down to the point of control, tested that consolidation zone at 25 cents, moved up, was able to break through the resistance trend line right there, moved left. So, pull back down, formed a higher low, weaker thrust up, lower high, higher low. Price contraction, channel trading. So since we're price contracting and channel trading, it means we should probably be looking for a break of that zone. Something like a broadening. So I'm going to use, we do have to include the wicks. Ooh, that's my daughter. That is my daughter. She sounds mad at me. It's about time she knows that it's time for daddy to get off the stream and eat lunch. Oh, silly girls. Let's see here. Let me go get her real quick. She's running around in her walker. She threw an Elmo at me. Sometimes we disagree. All right, guys. Let's see, about 3 more minutes, and then I'll go. So brief ideas of looking at ZERP, because again, as I said, this isn't the ticker symbol, so I do have opinions on ZERP, but whatever. Okay, so let's just be realistic about what we're looking at. Okay, let's be realistic about this. Price trading downwards in a channel. Okay, the overall trend has not broken. Are we trying to catch a healthy retracement? At what point does this become? Okay, so have we seen a fundamental shift in the dominant trend? Has there been a significant change in volume? You could argue that this definitely was a significant change in volume. We haven't really seen a significant change in sentiment. And at what point, how low does this have to go for us to believe that we are no longer attempting to catch a healthy retracement of a bullish movement? So for example, the 618 would have been your first entry. And as we can see, the 618 did, after it got faked down to the 786, did attempt to hold price. The traditional way to do a catch like that is that you're targeting the 618 and you're going for the 236, or you're doing extensions. But the 786 didn't hold and the 886 didn't hold either. What was the Fisher doing while all this was going on? Well, the Fisher, let's see here, yes, gave you the extremely oversold signal, came back down. Yeah, the Fisher basically got this pretty much every time. What's the Fisher doing right now? So this is exactly what I was talking about when you're looking for the nuances of the Fisher on the daily time frame. Fisher, let's see, do we see any? Nope. Confirmation. Yep. Convergence. So lower highs, lower lows. Okay. And this is the area that I'm looking at right here. You see confirmation. You don't see any divergence. You see a little bit of confirmation here as well, where you do actually have a higher low. So you have confirmation here. So you have put in a higher low in this pattern of lower highs and lower lows. But here's what I see. I see the daily Fisher on ZERP looking like it wants to top below the 0 line. And that is a very bearish signal to me. That's letting me know that the wave cycle wants to stay negative, wants to stay below the 0 line. When that happens, at least for me, psychologically, we generally go down. And trading this, I would say, well, listen, we went down, up, down, up, down. Things do like to follow a pattern. Now, I'm not a chart pattern trading guy, but when you see something obvious like a channel, you do have to plot it out. Also, just putting with that the fact that there's no key level. We had a very, very beautiful bullish movement here. Great. But there was no fundamental level that held. Again, if we look at let's scroll over here and not take the consolidation phase that led to the bull market into account. Let's just look at where's the point of control now. Yeah. So we actually do have an overhead point of control. That point of control was at that 618. So you can actually see right here, this is where the market told you, traditionally, the Fibonacci told you this is where you need to buy. And look, that's where the point of control is. You have a big spike in the volume profile right there. Yes, so this was also most likely an area where we had aggressive initiation on this on its run up there. This is the tether pump, but this big spike up here that you do have to measure from. You do have to measure from the tether pump. Unfortunately, you can't discount wicks. You can't discount the technicals. Price did trade that high. It doesn't matter if it was bots, scams, dumps, wash trading. It doesn't matter. It happened. And you are being disingenuous if you're not measuring from it. And you can see that traders did not measure from it. Is that right? Double negative. Because there was a lot of consolidation at that 618, which is where the Fibonacci tells you that, hey, the market has had a fundamental change in market structure. We've had a big spike in volume, and we've had a bullish movement upwards, a very volatile bullish movement upwards with a lot of volume. Great. Awesome. That means we're going to the moon, baby. Buy on a healthy retracement. What's your standard default healthy retracement? Well, for me anyways, we do look at our fib level. 618 is your pretty much golden standard. Although there are situations where I am more prone to use the 382 and the 5, but more on that later. So unfortunately for ZERP, I have not seen a significant change. Unfortunately for ZERP, that level did not hold. Neither did the 786. Neither did the 886, really. I mean, the 886 did sort of kind of hold. And while I am willing to accept the 886 as a bottom for Bitcoin, am I being disingenuous to say that I'm not willing to accept 886 as the bottom for ZERP? I don't know. I am trying to approach it the same way and not have a bias because I am trying to be coin agnostic when I approach the charts. But I need to see some volatility here. We're moving sideways, consolidation on the daily time frame. So you can make it very simple. You can keep it very simple from there. Let's go down to the 4-hour chart and make it super simple. But before I do that, I just do want to say that looking at this, I have a bearish bias. More than likely, if the pattern holds, then we do need to have a retest of the channel. Okay. Now it doesn't mean we're going to get it. We could just go straight to $5 per ZERP from here. But the overall trend is bearish, and I have not seen volume or sentiment change to change the previous market, or to change the dominant trend. Unless you have a significant change in volume or sentiment, the underlying trend is unlikely to change. You need a force. So let's go into the 4-hour time frame and see if we can get some short-term plays out of this. So what do we got? So on the 4-hour time frame, we do have that same thing. We have a descending channel inside of a descending channel. Patterns on fractals on what? All right, so okay, so a little bit of an SFP, swing failure pattern. So where's our volumes? Right here. So we've got resistance. And we've got support that got broken. Okay, I'm using the, let me bring this down a little bit because that's being disingenuous. Okay, so I'm using the tops and bottoms of the HVN, and the reason I'm not using this is because we had a range, and there is a shallow pocket of the HVN here because this was a range break. And actually, as you can see here, we had established support. Price came down to retest support. Price broke through that support. And what this looks like on the 4-hour time frame is a retest of support and potential rejection. So I would feel very comfortable in an XRP short at this point in time, and I would be comfortable to exit my, so just looking at this, I have different positions on different tickers for different reasons, but looking at ZERP USD on Bitfinex, and yes, overall ZERP USD, but ZERP BTC is going to move slightly different, and there's a reason that I'm doing what I'm doing. But just sticking to this chart right here for this purpose and this reason, the long is speculative. And while we do have, so anyways, I'm not going to get into that, so that's not important. So this looks like a retest and rejection of ZERP, of support. If we are able to close a 4-hour candle back inside the range, your trade gets invalidated, and you look to enter a short upon a retest of resistance. So, I mean, you can do that on a very short time frame by taking a retracement level, for example. Let's take a look at where we should see a rejection if the bearish trend is likely to happen. So yes, we have that 618 coming exactly pretty much right here in the range. So looking at that 33.6, so 0.33693, so 33 cents, 0.693, is where you have your 618 Fibonacci retracement of this previous downwards movement. Look for price if price does get up there. But again, you're watching these fibs to see which levels you get a rejection from. Currently, right now, we're getting rejection from the 382. Which is, again, fairly common, and one reason that I do like to use the 382 and the 50 more often than I use the 618. But in this circumstance, I will be using the default settings and the default strategy, I guess, for fib to explain this particular setup. 4-hour chart also recovering from being slightly oversold, but have not crossed the 0 line and looking like we're getting stalled out. So if Ripple is able to rally here and close a 4-hour candle above 0.32590, so 32 cents, 32.559 cents, then your short trade is invalidated at that point in time, and you're looking to re-enter around 33.693 cents or 0.34 cents, which is actually where your resistance begins at the HVN. So actually, I could be, again, I drew that fairly subjectively. You could say 0.34, 0.34222, which is what that actually is coming out to. So yes, this is going to have an element of subjectivity in it because there's no perfect horizontal line. You do have to paint with a brush, not a fine tip pencil. If you're able to get above that, then you have a fairly significant, you have a kind of a juicy long trade actually, because you have this very shallow area of the volume profile. Actually, let me take more data in. Cancel all orders. I took in more data. Absolutely wrong. Not a shallow area whatsoever. But you do have a very, very momentous movement downwards. So this move down on high volatility, which if you don't take in this consolidation range, there's a way to look at this. The way to look at this is this. You have support here, more generalized support. You have really volatile pushes down here, right? Which are actually forming the top of your range. So far, price has only tested these areas as resistance, the low of this. Hasn't really tested the lows here, okay? Nor the actual median of the consolidation zone, this point of control. So you do have targets. You do have targets if we do break to the upside of a retest of this resistance, because we're breaking resistance here. Where's our next area of resistance? Well, it's at our next area of resistance right here. So if you are able to get above 0.34222, then you could actually look to go to these two Fibonacci extensions of this movement, which is another great way. ICT does this. 0.35 and 0.36. So actually, to be more specific, 0.35921 and 0.36401 are likely targets. Those do have confluence on our charts with previous support on the 4-hour time frame. But overall, if I were to take a stab at this, this seems like a good area to re-enter into a short. You have that classic bear flag formation. You have a highly volatile movement downwards. You have very little volume. You're below support. You have established a trading range below that. And on the bigger picture, you are in a descending channel formation. Lower lows, lower highs, right? You get a little bit of a Frankenstein here in the middle here. But you get that little Frankenstein here right as well too. You know what I mean? I guess, no, let me rephrase that. That was on the way to form higher highs. So here's a good example. Although this does look better, but even this period, this was reaccumulation, did not change the dominant trend, which in this case was up. And the more dominant trend above that, the actual channel formation, was to the downside. So the current cycle is to the downside, and the channel is to the downside as well. So until I see a significant change, and that doesn't mean we can't execute this and then still go down, but since the overall sentiment is bearish, you have to be careful with counter sentiment trades. So, and just looking at those specific technicals right there, that looks like a decent short setup. I'm not going to lie. You break below support, you come back up to test. Actually, you break below support, you put it in SFP, so a swing failure pattern. So you have your buys set below your current low because you're expecting for price to test those areas, right? And now whether that turns into a slam dunk or a scalp is right here. And this is probably an area where I'd be looking to exit my long trade. You can put it back on if price goes ahead and closes above resistance. You could also look at that local point of control as well, but you got to be, where you're measuring your point of control is going to be subjective. To get an unsubjective look of measuring your point of control, you could look at something like VPSV. So let's try VPSV, and then I'm going to go. And we're going to disable visible range. So where are areas of the volume profile that have been untested? So we were talking earlier about this zone right here. So that is My family is hilarious. I love the people in my life. So yeah, all these have been tested. This one hasn't been tested. And then there are other parameters that you can look for in a trade as well, such as your first bumps. These are good targets. Yeah, you can see very well the power of the point of control. You have price really attempt to rally above, but overall the market says, nope, this is the level, bud. This is the level. This is the range. Slightly below previous. You do end up closing your 4-hour candle much lower. Although this looks nice, didn't really mean anything. Very hard to take advantage of. And then price consolidates below the point of control, makes an attempt, absolute failure, rejection. So very similar thing. We are trading above the point of control right now, so let's see how this happens. Unfortunately, we're trading below the point of control and below horizontal support, which is now looking to act as horizontal resistance. So you have this range, this temporary range, this daily range of 4-hour consolidation. And you're looking to base your trade on which way this breaks. And again, breaking is a close below, and an open and a close below is full confirmation. So yeah, looking at the fissure on the daily, looks like a rejection from the 0 line. Looking at the fissure on the 4-hour, looks like we're about to get across under right here. So be cautious, cuidado, man, especially because you're trading into an inherently bearish chart formation. All right. Thank you so much, guys. You have been awesome, man. Whoa. Hey, man. What's going on, brother? Hayden, I didn't see you in the chat, my good man. Let's see here. I appreciate you watching me on work, man. Thank you so much, man. Thank you, guys. I really appreciate you taking the time to spend your morning with me. I really appreciate being here with you guys. I have a great time every morning that I come on and do the show. For the premium subscribers who are watching, I'm going to go get some lunch. I'm going to come back. And then we're going to kick it in the ass. All right. But I don't know how much ass kicking there will to be had today, but if there's some asses out there, they're going to get kicked. All right, guys, regular end of the show stuff. If you guys do want to support the show and if you enjoyed the content, make sure you hit that subscribe button, the thumbs up if you're on YouTube. I would highly appreciate it if you consider coming on over to twitch.tv/crackingcrypto. Their platform is just designed in a way that it's better that if you're going to be a regular viewer of the show, you're going to be more comfortable watching us on Twitch. There's just, we can do funner stuff. There's more ways for you to interact with the show, like overlays on the emotes. And we don't have the most beautiful like Twitch overlay and stuff. I know we're working on that. We've got a quay of all the stuff that we've got to do, and it's up there, man. So you guys got to remember that we do run a company that teaches trading, educates trading. We work with investors as well, and we don't tell them what to do with crypto. That's confusing. Anyways, I'll explain that later, but it's nothing really to explain. But Twitch. Okay, Twitch will help you interact with the show better. So we appreciate it, guys. If you want to go over there and give us a subscription or a follow, we highly appreciate it, man. Yeah, I'll check my DM, but not live on the air, my man. Let's see here. Other ways you can support the show, obviously. I'm brain farting now, man. I'm hungry, and my hunger is getting to me. Oh, merch, duh, of course. If you guys would like to get your hands on lovely beverage vessels, lovely, fantastic looking hoodies, you can support the show by picking up some merchandise on our merch store. Simply go to crackingcryptocurrency.com/merch. If you guys would like to join along with us in the trading group, get access to mine, Alex's, Fibonacci's, whoever else works for us on that particular day, analysis, trade setups, and signals. Oh, right. My bad. I need to click this button right here. Then you can join the Kraken Cryptocurrency Premium Trading Group. You will also get access, so as I said, you get access to all our signals. You get access to the private Discord members lounge and VIP day trading voice chat. You get access to our database, which I have packed with PDFs, webinars, workbooks, everything you really need to help educate you and act as a good, store of data. More important, you get access to my webinar series, which I am designing to help you start from scratch and become a profitable trader. You also get access to one-on-one support as well. If you guys have any questions, thoughts, comments, suggestions, sarcastic remarks, or death threats, leave them in the comments section down below, or hit me up at contact@krakencryptocurrency.com. You'll get me or one of our customer service reps. Sorry, I'm hungry. You guys have been fantastic and awesome. Thank you so much for spending your time with me. As always, I've been Justin Wise. Hopefully, today's show has helped crack cryptocurrency for you. I'll see you guys tomorrow. Peace out.